Hey traders, Shane from GMT Futures, welcome. I'm going to take you through today how to measure maximum adverse excursion. The first thing we want to do really is find out exactly what maximum adverse excursion is. So let's have a look at a definition of that term. And really your MAE or maximum adverse excursion is the worst intraday price movement against the position measured from your point of entry. So if your strategy is a trend trading system and it has an entry point with a cross of, say, perhaps a moving average, it's really the maximum adverse excursion or the maximum movement against your initial entry point. So I'm going to take you through some examples of that. The other definition we want to measure, the other definition we're looking to measure is the maximum favourable excursion. So what that is basically the maximum movement that a position has in your favour from its point of entry. So it's really the opposite, and we're going to track both of those in an example here and show you how to measure those with your system, because really when we're trading we don't want to assume that that the stop we're tested or the stop that we have is the optimal stop. What we want to do is we want to basically test that, and there's a number of ways we can do that, and by using maximum adverse excursion we can actually test to see exactly where our optimal stop could or should be in our strategy. So let's have a look at that, how that looks on our charts, and then we'll go through some data that we've looked at. So traders, here we have our trading system. Now let's just pull this open a bit. Now this is on crude oil. It's on a fairly high tick chart, 896, and you'll see here that now our trade entry is basically a break of our resistance line. So the red dots are our resistance line. Once price breaks that point, which you see there when we start printing these cyan candles, that's telling us that our system it should be long. So very, very simple strategy. So we're long here, and the price at which we should be long is 86.46. So basically I've just put a line there to mark that level out. And what we want to do is we want to measure how far the trade goes in our favour before it stops out or before the end of the day occurs, and how far the trade moves against us. And because we don't have a fixed stop on this test example, we're going to assume that we'll basically be out of the trade once the trade sets up an opposing setup. So an opposing setup on this strategy is the white candles. So once we get a white candle set up, so a break of support, which is the green dots, then we're in basically a short trade. So at the moment we're in a long. A printing of a white candle would signify that we're out of the long and into the short. So you can see that doesn't happen. We don't get that. It happened previously, but we don't get it here from our entry point. So let's have a look at what happens. So the trade moves in our favour and rallies up, but then it actually takes a fairly sharp sell-off and moves against us. And you can see that I've just marked on this chart that the trade actually goes against us to around about 63 points. So, or 63 cents, so $630. So that's the worst the trade moves against us, and you can see that it doesn't. So you can see that it doesn't actually, that's the worst it goes against us, and it doesn't move any lower than that point, because at this point here, the vertical axis there, or the vertical bar, that tells us where the end of the day is. So there's the end of the trading day. So it doesn't really go any further against us, but fortunately, so that's our maximum adverse excursion. Our maximum adverse excursion is about 63 cents. So basically we've got a 2,720 maximum favourable excursion. That's as far as the trade goes in our favour, and the trade goes against us 63 cents. So $2.72 in our favour. That shows you the maximum favourable excursion and the maximum adverse excursion. Now, why is it important for us to know that information? Well, ideally what we want to do is we want to identify the point at which trades are profitable and what is our optimal stop. So based on John Sweeney's analysis, or his work on testing stops and testing this maximum adverse excursion, he basically came up with a concept that really good trades don't really go too far against us. So we're going to measure that as part of our analysis today, and we're going to have a look at how our system, based on a very basic strategy, can be improved looking at the maximum adverse excursion. So let's jump in and have a look at that now. Okay traders, I've got a chart of crude oil, the 89 tick. This is basically our strategy that we tested. So once our system presents a sell setup, now we're testing from 2 AM to 5 AM. I've just pulled up a chart with a standard time. So the trade setup here is 88.55. So what we're looking for is we're looking for the standard entry. On this data that we tested, we had a 20-point stop. So 75 would be the stop there. And that was just a basic stop that we ran with a trailing stop as well. So a 20-point stop, and that would trail as price moves down in our direction. Now you can see here that the initial trade setup is a short because of the white candles. You can see the sell setup, and we get triggered in. Now the trade sets up at 88.55. Now the actual trade takes some heat and price moves back against us by about 9 points, but then eventually moves down to get stopped out because we're using a 2-point trailing stop behind our little red dots there, which is our price trailing stop. And once price breaks through that trailing stop and knocks us out, we're out of the trade. So we didn't use the concept of getting into an opposing trade. We've just used a trailing stop here. But what we wanted to measure was basically what was the optimal stop based on our entry. Now, we wanted to lock in profit as the market moved in our direction. So the two things that we measured were, or the one thing we really were measuring here based on this example, was that we were looking for how far the trade went against us before we got stopped out, and what was the optimal stop based on our very simple trend trader strategy entry point. So without using any filters at all, we basically just took the trade once it broke support or broke resistance, depending if we were long or short. And in this example here, we would have had a 9-point adverse excursion, maximum adverse excursion with 9 points, and then our profitable trade was 24. So we can add that information to our data set. Now, what I'm going to take you through now is I'm going to take you through the trades that set up during our testing. So what you'll see here is that we've got basically a collection of trade setups. So we've got our maximum adverse excursion. Now these are our stop strategies. You've got, if the trade, of the trades that we tested, there were a total of, and we'll just count those up, 595 trades. Now 12 of the 595 trades had no stop retracement at all. So they didn't go at all against us in our trade, and that netted out about $2,250. And then we had 1, 2, so we broke them down into their stop, or how far the trade went against the initial entry. And you can see there that, so that's column number 1. Column number 2 is the number of trades. Column number 3, we have the winners on the left hand side, the losers on the right. Column number 4, which is column D, was the total profit made on each of the stop strategies, or each of the levels of stop. And column number 5, which is our column E, was basically the losing trades, the dollar value for losing trades, and then we had a total net profit based on, or loss based on, the actual outcome of the trades, winners and losers. So you can see here that from 0 to 8, there's actually a very profitable strategy there for having just an 8-point stop. As you push the stop out to 9 points, you've got a couple of losers. At 10, you have a few losers as well. Obviously there were 37 trades, 10 winners of those 37, and gave you a net loss of 1440. But you can see that after from 10 onwards, so from 10 to 20, having your stop at 20 points all the way down to 10, the total loss on the strategy is about $26,000. So there's no real value of having a bigger stop. That clearly shows us that the optimal stop is really around the 8 or 9 point level. Anything above that, based on the system and based on the rules that we used, is basically a waste of time and money. So we definitely want to be able to identify when we're testing our system what is the optimal stop. That's why we use the concept of maximum adverse excursion, maximum favourable excursion, because we want to identify how far the trades go in our favour, what potentially is an ideal target for us to look at, but also what is the best stop strategy for us to employ with our system. Because if we go to the broker generally recommends a 1 or 2% per trade. Now if you've got a $20,000 account and you're trading 1% of that, that means you've got a $200 stop. If you just automatically assume that a $200 stop is the ideal stop to employ, then you're going to be giving away a lot of profit, as you can see here, and your actual system may not be profitable based on that big of a stop. So we want to measure our stop objectively, and to do that we need to measure the maximum adverse excursion, or at least the maximum adverse excursion based on our trade parameters and our trade rules. So hopefully that's given you a little bit of food for thought and giving you an idea and a look at why it's important to measure our stop level, and why it's important to continue to track that information, because that information may change. You might find that with a bit of volatility, those stops become a lot more profitable at 9, 10, 11 points. So we want to continue to track that information, and at least then we can objectively say, right, well, this is our optimal stop for the strategy we're using and employing. So thank you for your time. Hopefully that helped you with your trading, and it's a way in which you can kind of look at your own system and just have a look at the trade setups and where the optimal stop potentially should be. So thanks for your time, everyone. Now, if you would like more information about GMT futures, please feel free to email us at gmtfutures.com, or info@gmtfutures.com. We're also on Facebook as well, and looking forward to chatting to you in the future, and we'll be sending through a lot more videos as well to help you with your trading. So thank you for your time, and have a great trading day. Cheers.